Does take us to our talk of the tape, bubble trouble, and whether the once soaring semis are now in danger of an even bigger pullback. Let's ask star chip analyst Stacy Rasgon of Bernstein. He does join us now. It's good to have you back. It is stunning to watch what's taking place today in this market. Stacy, Nvidia, a $100 intraday move, almost 10%. What do you make of it?
Look, so I was joking earlier that like maybe some of these just flew a little too close to the sun for a bit. I mean, like semis have still had a monster year. They're up 20% year to date. They're up 70%, something like that, year over year. Nvidia itself is up 80% year to date still. So like I don't worry too much. Some of this is probably kicked off. You know, we had Marvell and Broadcom report last night, and actually their AI revenues were quite strong, but the core businesses were not so good for either of them. You know, enterprise spending and the like, carrier spending are not great. And so I think that kind of weighs on it. And then people, I think, were just looking at Nvidia in particular getting awfully close to that sort of magical, you know, four-figure $1,000 kind of number. And maybe there's a little bit of profit taking and it kind of sets everything else down. But like, I'll be honest, like this on a noisy day like this, I don't read too much into it. Like I said, the space has still had a monster year, and I still think some of the markets, especially the AI related markets, still have legs to them. I think those still have room. Now we can talk about some of the other markets.
Well, I do want to do that. I do want to do that in a moment. But when you say something like the core businesses of these companies, you know, for the ones that reported not so good, this market has ignored, in many respects, the core businesses of many of these companies, and they've gotten this AI halo from Nvidia. Did we overdo it in giving too much of a bump relative to AI when it's not that big a part of business for many of these other chip players?
Yes, possibly. Like in my coverage, there are two names that actually have meaningful AI revenues that's more than just a story, that's actually contributing meaningfully to their numbers. It's Nvidia and Broadcom, and not a whole lot of others, right? Again, you can even look at an AMD, and AMD is doing really well, but as a percentage of the revenue, it's not that big, and it has not been enough to offset weakness. You know, the stock's been great, like don't get me wrong, but like AMD's missed numbers like every quarter for the last year. You got names like Marvell last night where, again, like their forward guidance was very weak. You know, AI was not enough to make up the difference. Broadcom was kind of the opposite. I mean, Broadcom took maybe $2.5 billion of incremental headwind like out of their core business versus last quarter. But they had like their AI business was stronger by exactly the same amount. It was actually enough to bridge the gap and offset it. And because of that, like our Broadcom numbers last night went up, not down on the back of all this. So there are some names that I think are actually benefiting very well. But yeah, there are others where it is more of a story or a narrative, and we have yet to see it really influencing the numbers to a great degree.
You make the point very well here for something like an AMD. A miss, and the stock and up and up and up and up. I mean, it's up 113% since November 1st. Yeah. What kind of re-rating is needed in some of these names if you suggest that, you know, the fundamentals that these companies have been so rewarded on are good, obviously, but come on. I mean, we've been giving insane gains to these names.
Yeah, it's funny, the ones that are succeeding, the valuations are not crazy. I mean, again, I've made this point a number of times, like with you, but like Nvidia, if they can actually deliver what people are thinking they can, like the stock is not expensive, right? It's actually much cheaper than it was before this all started. Even Broadcom, who reported last night, I mean, Broadcom is more expensive versus its own history, but it's trading right now in maybe the mid 20s. I mean, the entire SOX index is in the low 30s, right? You got some of these other names, though, where, like I said, the AI piece or whatever they have has not been enough to offset. And I throw a lot of the analogs into those names. They've just been cutting numbers like crazy. The stocks just really haven't gone down. And like the multiples are very, very high for like a lot of the folks in the space right now. And at some point, you know, we do need fundamentals to start to pick up. This is what's been going on, by the way. Like people have been buying the cuts broadly in the space, which is a normal thing to do in semis. You tend to want to buy them when there's blood in the streets. But usually the stocks go down before you buy them. And in this case, like the numbers have been cut and the stocks, maybe they didn't rip in some of these, but they didn't really go down either. And yet people have been buying those cuts anyways. And so it'd be very interesting to see what happens. Hopefully as we get, you know, maybe into the second half or into next year, numbers do start to pick up. Do the stocks actually go up as the estimates start to go up? Do the multiples just start to come down? Like, I don't know yet, but the typical practice would be that the multiples come down. I mean, that's the normal kind of cyclical investment behavior.